We appreciate you joining us today here on America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Chaz Price. 419-794-3030 is the phone number. The website, arhq.com. If you saw the movie The Big Short, actor Christian Bale played the part of Michael Burry, who made billions when he bet against the 2008 housing market before its collapse. Recently, Burry placed another bet, this one for $1.6 billion, that the market is going to crash again, this time because of commercial real estate. Shark Tank's Kevin O'Leary spoke on Fox Business about how regional banks hold a lot of commercial real estate loans and, well, they're headed for trouble.
They were financed at 5 to 6%. They will now be 8, 9, 10, 11%. That's going to cause a real run again on these banks, because if you have a payroll account in a regional bank right now, you're quietly moving it to Citi or to JP Morgan or Morgan Stanley. You can't take the risk. So that run is going to continue. This gets worse before it gets better. And what's it doing to small business? Killing them right now.
He's got a flair for the dramatic there. Do you see this as a big threat to the health of the economy and people's retirement accounts?
I see it as a big risk next year. I think, going into 2024, I think there's a lot of, landmines that are out there that, people need to navigate through. But, the good news is volatility creates opportunities. So for me, it's a matter of knowing what you own. I talk a lot about this in meeting with clients, and one of the ways that our firm is different, I'd say, from other firms, in the fact that most people will stick with traditional asset allocation, meaning they'll buy a little bit of everything. They'll buy large growth, large value, large blend, medium, small, international stocks, bonds, and they'll just balance it out.
Shotgun.
Yeah, they'll hopefully have more go up than down. And that shotgun type of an approach is quite a bit different than what I was taught in the military. So when I served in the Marine Corps and, we were shooting down range, I either hit my target or not. So if you go back and you listen to, some of the past advice that we gave on the show, when interest rates had hit rock bottom out, we had talked about the threat that we saw with rising interest rates within the bond market category. The traditional set it and forget it approach was a dangerous approach because there was a significant interest rate risk that was out there. There was other alternatives that we believe investors should have, could have looked at in that type of environment. So if there's an area that has extreme risk, it's like that may not be an area where we want to take and position money at, especially when you're in retirement time, because retirement, it doesn't give you the luxury of time to make up for major losses.
Dare I even say a known risk at the time? I mean, we knew interest rates were going up, and yet, we still, after doing reviews, saw people having bonds, and we would ask them, like, what have they done? What has your advisor done to, take care of this known risk? We know interest rates are going up, and it's kind of like deer in the headlights, nothing.
Yeah. So this is another area where, again, this talks about the fact that you have a large amount of commercial real estate that is set to be able to be refinanced. And, what we saw is in 2023, a dramatic increase in interest rates. That's good for savers. And if you're a saver and you're not getting over 5% on your safe money, we should be talking. But, for those people that are in debt, commercial loans, what we saw after COVID is this work from home environment. Now, that slightly changed a little bit. A lot of people are coming back to work, but even driving around Toledo or here in Maumee, you see a lot of commercial space is still not fully occupied. Now, in addition to that, if the commercial loan, it resets to a higher rate, that means that owner of that mortgage is ultimately going to be responsible for paying that higher interest rate. Mm-hmm. And that could put strain in the financial banking world. In this case, as they talk about the regional bank. So it's so important, folks, for you to know what you own and get yourself positioned on where to invest in 2024. It's my belief that you want to continue to focus on companies that are, cash rich, low debt, have strong profitabilities, and have a competitive advantage from their competition that's out there. That type of area is a strong area to have. You also want to have areas on where to invest for 2024 that can be companies that people need every single day. So, whether we have a meltdown, what are the type of products and what are the type of services that you need every single day, regardless of what the state of the economy is. And then in some cases, there's some good trade-offs right now where it might be a good idea with the strong run-up that we've had in 2023 to rebalance your portfolio. There could be some rare areas where you'd maybe want to take some risk off the table. Again, going back to if you look at traditional fixed rates today, most fixed investments in the safer category are over 5% today. So for some of those areas that are risk, you can reduce some of the risk by taking it away from those risky assets like stocks and bonds, reposition them into other fixed accounts to higher returns and less volatility.
Yeah, and I think a bigger one. What Kevin is missing is not only just the commercial debt market, but my understanding is that there's a tremendous amount of Treasury debt, just U.S. Treasuries that are expected to be refinanced in the next 4 years. Some of the estimates say that one source reports that $7.6 trillion in interest-bearing U.S. public debt will be expire and will need to be refinanced in the next year. So that's about 31% of all the outstanding government debt. In addition to that, in the next 4 years, there's another 13.1 trillion that's expected to mature. That's 64% of the United States public debt is coming due in the next 4 or 5 years. I mean, that's going to be a significant challenge that the U.S. government is going to face as it tries to manage its debt portfolio in just financing the government spending needs in the future. It's mind-boggling. But I think that's the bigger issue. I mean, there's landmines all over the place, but this one is one that we probably will be talking about in future segments, and one that I think our listeners need to stay on top of is what's coming due in the U.S. government treasury that we need to watch out for. So more to come on that.
Yeah, I'd say last category to talk about, as we talked about last week, the other thing is the student loan forgiveness and the debt repayment and the obligation that's going to put on Americans that had to pay back their debt. 2024 could be setting it up to be a wild ride. So here's exactly what you need to do as a listener to this radio show. What I would encourage you to do is be one of the first 5 callers. And for the first 5 callers, what we're going to do is we're going to do an independent portfolio analysis for you. We're going to dive deep into your investments, and we're going to be able to tell you what your GPA score is and tell you how to optimize your overall portfolio. We'll look at what your actual holdings are. We'll talk about how you're positioned from an asset allocation standpoint, making sure that when we see some of these big threats that are coming out there, what percentage of your money is exposed to those type of threats, and what are possible ideas and solutions and alternatives to help get you positioned to not only survive but thrive next year. Because again, volatility can create opportunity, but this is not a time to be sitting back, setting and forgetting. This is a time to take action, and that's exactly what we're happy to do and help you out with.
Because it's one thing to know that a storm may be coming down the line. It's another thing to actually prepare for it. If you're one of the first 5 callers this week, again, as Nolan generously offered up the independent portfolio analysis, let you know what moves you need to go ahead and make to weather what may be coming down the line. Just be one of the first 5 callers right now, 419-794-3030.